Welcome to Global Money Talk, brought to you by SamProTV. Greetings to our viewers from across the U.S., Korea, and around the world. We're coming to you live from the floor of the New York Stock Exchange in New York City, the financial capital of America. I'm Remy Blair, and joining me on this Monday morning for a market briefing and to weigh in on the top stories of the day is Tai Wong, independent proprietary trader. Tai, happy Monday to you.
Happy Monday. And you know, it's National Chewing Gum Day today.
Yes, so I know that we talked about this earlier, but that means that we're celebrating chewing gum?
Yes, celebrating chewing gum, and we can't chew it on the broadcast right now, but afterwards I feel like I'll have to have a piece on the way home. And I'm glad I'm not in Singapore where that sort of thing may be frowned upon.
Yes, so we won't be chewing gum today on the show, but we have a lot to chew on, right?
Absolutely, absolutely. a lot of news, a lot of stuff this week going on. In terms of the outlook, it's all really like jobs all week this week. We have JOLTS tomorrow, job openings. We have ADP on Wednesday, and then the big employment report on Friday, which is really important. And then we also have an unbelievable number of Fed speakers.
Yes.
I think we have 11 different Fed speakers this week, and I started counting who actually isn't speaking, because they're like all on the wire. And then Powell, I think the most important. I think Powell was due at like 1:55 today. We'll see if he has anything specific to say, but it'll start giving us a better sense of what the Fed is thinking. And I just checked this morning before we went on the air, and the market is now back to looking at pricing in 25 basis points in November and 50 in December. So the market is pretty uncertain, and when the market's uncertain, data is important, and what the Fed speakers say is also important.
And as Tai mentioned, this week we will be getting the jobs report for the latest month on Friday morning, 8:30 a.m. Eastern Time. And we get non-farm payrolls, we get the unemployment rate. But before that, as you mentioned, we get JOLTS and ADP. So lots to watch in terms of the labor market this week.
Yes, and it matters right now, and certainly as we head into an election as well. So the news and so as the market confident really matters. It certainly matters, I think, that when in an election where nobody, I think Vice President Harris might be slightly favored, but well within the sort of the range of error of the poll. How people feel is going to matter, and I've noticed driving around in New York City and filling out my car that gasoline prices are the lowest they've been. In fact, I think I got gasoline below $3 a gallon.
Oh wow, that's pretty good.
I've seen that since the last Trump presidency. So the mood is going to be pretty important. This week will be an important week to really set the mood, I think, for the last quarter of the year.
Yeah, and you bring up an important point because the countdown is on to the presidential election on November 5th. So today is the last day of the third quarter, the month of September. So it'll be important to keep an eye on the economic data because we all know that the economy is a key issue that all voters are paying attention to in this election year. And of course, tomorrow evening we get the VP debate between Waltz and JD Vance. So that'll be something that we will be watching very closely as well.
It's could be a little unpredictable because Vance has probably had more time in the limelight. He's certainly perhaps the more controversial person. I think tomorrow will be, let's not make any mistakes, let's not do no harm to start with, and try to score a few points, like hit a few singles, look good, don't create any issues. And as you mentioned before, I remember the election in 1992 between George Bush the father and Clinton, and the term that's "it's the economy, stupid." And you could argue that the downturn in the economy after the first Gulf War was what cost Bush the father his re-election. So it's very important.
Yeah, and as we wrap up the third quarter 2024, as well as looking back at the equity gains for the Dow, NASDAQ, S&P 500, for the major averages, they're all up by at least 10%, even higher for the S&P and the NASDAQ, up by over 20% year to date. So that is significant.
I think it's good. It looks like it will be probably a pretty good year for stocks overall. But what does that set us up for 2025? And I think we'll be discussing that as time goes on, and certainly at post-election. Hopefully, we know who wins relatively shortly after, like the morning after would be fine. But let's not have a few weeks of uncertainty, which would certainly not be good for the markets. But we're up so much this year, depending on what the politics looks like 2025, maybe a more difficult year. And we've seen that in the past in terms of before, we get a really, election years are good, but then the post-election years, now we have to sit there, sober up, and look at what policy has for us.
And of course, as you mentioned, we are looking ahead to the month of November. We start off October tomorrow, but if we look at the calendar for the first week of November, as you mentioned, in addition to the election, we get the jobs report on November 1st, and then we have the election day on November 5th, and then the Fed meeting right after that with their rate announcement. So a lot to look forward to, isn't there?
In fact, the first time I can remember that the Fed actually moved their meeting to Wednesday, Thursday because of the election on Tuesday. So, if you're an options buyer, make sure you don't buy the Wednesday. Sell the Wednesday and buy the Thursday.
I know, that is important to keep in mind.
Yes.
But since we are about to wrap up the month of September, let's start out by looking at where the market is on this final trading day of September. Right now, we are seeing the Dow lower off by over 70 points. Earlier, the Dow was lower by over 200 points. And right now, the NASDAQ is in the red this morning. It is off nearly 11 points, but has turned nearly flat on the session. As for the S&P 500 on this Monday morning, right now we are seeing it trade flat. So, Tai, let's start out by looking at some of the headlines that are driving the news this morning. But I think right now, while we're looking at markets, let's start out by looking at China, especially given the gains overnight we saw for the stock index overnight.
So, another huge day in the Chinese market. Depending on what and this is on the back of the monetary and fiscal stimulus. And one of the things that came out, property's been a big problem for them because unsold properties, apartments that people paid for that haven't been completed because the firms are basically going out of business. China Evergrande is the one that really comes to mind. Well, one of the things that they changed, so in China, there's this thing called an internal passport. It's called huku in Mandarin. In Cantonese, we call it wujiu. And it says if you don't have that passport, so let's say you live or you were born in southern China, you couldn't necessarily go and buy something in Shanghai, right? You needed that passport. So what they did was they announced that in Shanghai, Shenzhen, and Guangzhou, which are some of the three of the biggest cities, in Guangzhou, all restrictions have been lifted. So anybody can go and buy literally any property there. And in Shanghai and Shenzhen, which is near Guangzhou, which is the center of their Silicon Valley in a way, I suppose, they've lifted a lot of restrictions. So let me read. I spoke to somebody I have a lot of respect for, who really watches China very carefully. I'm going to read his comments to me verbatim. I'm going to keep his name out of it because I don't think he wants to be public. He goes, there are comments online that the Chinese went crazy after the latest round of stimulus. Lots of people who have nothing to do now are motivated to trade stocks and buy properties. Everyone now wants to gamble on stock and property rebound. People are begging banks to get as much loan as they can get. Animal spirits are unleashed. So let's look at graphic number 1. Let's take a look at what the markets did today in China. So look at, on the right-hand side, those bars are just unbelievable. And this is their sort of the benchmark. I think it's up 4.5% today after it sort of gap opened higher. People are there's a lot of FOMO. Oh my goodness, this is the biggest move since 2008. We can't afford to miss them. I don't see charts like that. So let's move to graphic number 2, which is the CSI, the same benchmark since 2006, to give you a sense of perspective. So you can see that massive rally on the left side of the screen, and that was really the golden era of China. Drove base metals higher, iron ore higher, all markets higher when they were growing like gangbusters. So it was really the first decade of tremendous growth. And then you see the financial crisis, it came down, and then its moves then. So now, at the right-hand bar, this is a monthly chart, so each bar is a month. It's a big move so far, all in 1 week, and there's probably more room to go. So my thinking here is, now they're off now for 7 days, October 1st up to October 7th for their golden week. They're celebrating the 75th anniversary of the founding of the People's Republic. So markets won't be back until October 8th. and they'll give people a little time to think about it. But if one, my friend, the China expert is saying, I think there's more room to run here. And if you look at this, this monthly chart, for perspective, we can certainly rally a little bit higher. So don't get in front of it. If you're long, great. If you want to buy a little more, there might be a little room to go even a little higher. Part of it is a lot of the local quantitative hedge funds have been hurt substantially here. What they would do is they're doing this market neutral strategy where they were buying individual stocks they like, but to hedge it, they were selling the index, and the index has soared higher. So they've had pretty bad margin calls. I think the market isn't trying to hurt in China, isn't trying to hurt anyone, so they're giving people a little more time. But there's a lot of short covering as well. So I expect this, if the people of the retail investor is really getting into it, they can drive prices substantially higher. So the question then is, maybe they'll hit their 5% this year, which is fine. What's really important is, has this really turned the economy around? Are people who aren't speculating in the markets, in the property markets, in the in the financial markets, do they really feel confident? Do they, is this economy different than it was for all of this year when people were really, really depressed? So I don't know. I don't know if they've managed to do that. In an economy where they're trying to pick winners and losers, that's still a big risk. So that remains to be seen. But in the meantime, if you're a Chinese investor, if you're an American investor investing in ADRs, I bought a little bit of the Chinese ADR just to have something in it, so I have something to watch. Enjoy the ride.
Yeah, and you bring up an important point, something that we've talked about in the past, especially given the recent stimulus measures and the announcements from the PBOC, whether or not this will be enough in the long term to shore up the economy, especially the property sector.
That's right. That's right. And the property sector was a big leader, so they're trying to turn it around. It remains to be seen if they, if they'll need to do more.
Well, we'll keep an eye on this sector, but before we move away from China, I do want to take a look at the AI announcements that came out. So we saw that Cambricon Technologies soared 20%. It hit its daily limit over there.
Yes.
And this did come on the heels of an announcement regarding NVIDIA chips, didn't it?
Right, right. So the Chinese authorities have said it's not a rule or regulation, but sort of a heavy hint that we would like you to buy fewer NVIDIA chips and buy more locally produced chips.
Okay.
So let's take a look at graphic number 3, because this is interesting. NVIDIA's, and this is from Bloomberg, China remains a key market for NVIDIA, but look at how much NVIDIA's revenues from China and Hong Kong have dropped over the past couple of quarters. Very important for NVIDIA. This may weigh on NVIDIA a bit. It certainly did on Thursday. I think NVIDIA closed down maybe 4%, cutting off a rally that they'd seen for the last couple of days. So there's U.S. export curbs, but if for the chips that aren't being restricted by the U.S., China says really try not to buy them. Not sure how much the Chinese companies are listening to that. They may pay lip service to it, but at some point, there are stories that some companies are buying as many as they can, while they can, because in order to run a lot of AI, you need these chips. And the Chinese makers like Cambricon are good, but they're probably some years behind in terms of being able to have these GPUs to run AI effectively. So it'll be important to NVIDIA, something to keep our eyes on.
Yeah, absolutely, because even though there might be this mandate for local alternatives, in reality, we don't know what the gaps might be in terms of technology, as you mentioned. So
that's right. That's right.
And Tai, let's stick to Asia and take a look at Japan. So in the aftermath of the election last week, we saw a lot of movement in the Japanese yen, and Japan will be going to the polls soon. Incoming Prime Minister Shigeru Ishiba said he intends to call for a general election on October 7th. But given some of the uncertainty regarding monetary policy out from the Bank of Japan, we've been watching the yen closely. So tell us what's going on this morning.
So Japanese industrial production for August came in awful. Minus 3.3% for the month. The consensus was minus 0.9%. So quite poor. I think that in combination with Ishiba, who I think maybe a little bit of a monetary policy hawk in terms of we do want higher interest rates. So you've got a weakening economy and a BOJ who's ready to probably hike at least one more time. Market just got caught in a little bit of a bad mood. So Nikkei was down, I think 4.5% or so. I know at one point overnight it was down 5%, which is quite substantial. And certainly the very, very likely the Ishiba will be the next prime minister, but I suppose that's why you have elections. Or at least in most countries, there is some level of uncertainty. I do expect that he'll be the next prime minister, but Japan bears watching. The yen carry trade, the mood, and the mood that also translates to the dollar. Because yen weakens dramatically, it's going to make the dollar look stronger. And I would also add that we had inflation reports out last week. It was Spain. I think it was Spain and Italy. This week was overnight. I think it was France and Germany. And inflation looked fairly subdued, and it looks increasingly like now that Germany may have no growth this year. So the ECB, middle of last week, they didn't think the market didn't think it was going to get a rate cut in October. Now it's like 80%. So it seems like the Europeans are going to cut, and if the Japanese, necessarily don't raise, it may be good for the dollar, which has been trading at the extreme bottom of its range, but seems to be relatively steady. So a stronger dollar right now would probably upset the apple cart. Might be getting a little ahead of ourselves, but something we're keeping an eye on.
Well, Tai, because you mentioned inflation, I do want to switch our focus on over to a potential strike that is looming.
Yes.
So October 1st, that is the deadline for the ILA to reach an agreement. It doesn't look as though that will happen, and that's going to have ramifications for the U.S. economy. So I do want to touch upon that. But before we move away to that, because we're talking about inflation around the globe, so I just happened to look at an emerging market report for some areas of the world, and I saw that in terms of expectations for CPI in a country like Turkey, it was double-digit percentage point, and I hadn't been watching inflation expectations in that country, especially CPI. So I was surprised at the number, because compared to the U.S. or other economies that you and I have been talking about, that is a staggering amount, isn't it, when you see double-digit percentage points?
It is, and places Argentina, you sometimes see triple digits. I remember my daughter visited Argentina. I said, bring me back some pesos, because, Dad, they're going to lose a lot of value. I'm like, it's okay. I just want some pesos. But, and Chair Powell he talks about it pretty much all the time. And I think most Americans, don't really think about it. I mean, inflation's on our mind more than it has been for a long, long time, and it still has. Even though the level of prices are high, inflation itself, the prices aren't going up as dramatically as they were before. But inflation expectations, as you mentioned, in Turkey, it's double digits. Every year, you expect double digits. So if you're a worker, you expect double-digit wage hikes. You price things higher. You don't hold on to a lot of cash. So once that gets into an economy, it's really hard to dispel. And President Milei of Argentina was here last year. I think he's maybe gotten inflation down to something like 40% on an annualized basis, which will be shockingly a huge result, a huge accomplishment if he actually manages to get expectations down low enough that you don't automatically mark up wages and prices, so it's a cycle that never ends, and then you can't really plan. I mean, how do you buy? Do you want to sell stuff now when next year it's a lot higher? It just changes the thinking in a way that we as Americans don't really know. But as you say, we should talk about that Taft-Hartley Act. Get that in a second. But this port strike is going to happen tomorrow. As a matter of fact, I don't think they've had negotiations in the middle of June. And I understand that the International Longshoremen's Association, or this part of it, they want a 6-year contract with 77% rating. 77%. So those are the double-digit numbers that we're talking about. Like, really, 77%? You have Boeing, the machinists, want 30% over 4 years. So I think that Boeing strike, the friendliness of this administration to unions, or at least certainly paying lip service to it, is getting people to say, well, you know what? Let's ask for the moon, because maybe we'll get it. They also want certain things, like they don't want to automate a lot of things on the, at the docks, which will keep more jobs, will make things a lot less efficient. So I think we're going to be in for some time here. Now, President Biden said, I'm the most pro-union president ever, and I'm not going to use this to push the union. Let's take a quick look at graphic number 4, because I think his mind may change over time. So these are the ports, the major ports are going to be shut as of tomorrow afternoon and tomorrow night, all along the eastern seaboard, in the Gulf. On the right-hand side, you can see the imports that will be affected. Tin products, probably not going to matter to too many people. Oh, dairy products, eggs and honey. I went to Costco last week, and they didn't have eggs. It's not as bad as it was during some parts of the pandemic, but they didn't have eggs, and it's not the first time. So people will actually sort of see that. Coffee and spices are high up on the list. Copper products, and then our tobacco exports. If you look at the bottom half of that on the right-hand side, will be heavily affected. So I think it'll go on for a week or two, and then I think there will be some portions of the economy that will say, this is actually starting to hurt. We prepared for it, but do we want a really any hiccups in the supply chain right ahead of the election? They may, the administration might think, we're going to not want to do anything to anger labor ahead of the election, so they may let it sit. But it's, every week that they're out, it'll take a month to recover. And then let's talk about the Taft-Hartley Act, which is graphic number 5. I put some bullet points here so our readers can see it. So if a strike in 1947, the legislation passed that said if there's a strike that can really imperil national health or safety, the president could basically ask the courts, a federal court, for an injunction, which means have the federal courts order the workers back to work. It's an 80-day cooling off period. They go back to work, and both sides can negotiate. If after 60 days there's still no contract or nothing to agree on, they'll take the employer's last offer and tell the workers to do a secret ballot. If the secret ballot passes, so this cuts the union out of it, which is why if you're pro-union, you say you're pro-union, you don't want to use Taft-Hartley. That cuts the union out of it, and if the workers, a majority of them, say we want to go back to work, they will go back to work. It's been used, if otherwise they'll negotiate, but it's been used 37 times. The last time was George Bush the son, and it was 2002 to solve a West Coast dispute, which it did. So I don't think we'll get a lot of movement on it, but as it sort of extends well into October, people are going to be talking a little bit more about the Taft-Hartley Act. But, if you're looking for 6 years and 77%, I don't think the U.S. Maritime Alliance, which is that group of employers who do it, are going to have any interest in doing that, because labor costs, what was really interesting, I talked with a restaurateur last week, when Dan was interviewing him, he said labor costs, skilled labor costs have really been, have doubled. And I see that in sort of workers around me as well, that sometimes you hire to do things around the house, labor costs have doubled and they're not going down. So I think the Maritime Alliance is going to hold their ground here. So it'll be interesting to see how this plays out.
And as you mentioned, a shutdown of the ports could cost the economy up to $4.5 billion each day. And you mentioned supply chain, obviously, so it makes us think back to the pandemic. If you're going to the store, you can't find eggs or you can't find staples that you come to take for granted. And the longer the strike continues, then the longer that we're going to be seeing a supply chain crunch, and obviously we might start seeing layoffs as well on the heels of this.
You could see some layoffs, and you could also see a little bit of hike in inflation in terms of shipping rates. Freight rates have been going up in anticipation of this. In fact, the administration has come out and said, well, we don't want anybody gouging on freight rates, but it's the market. Right? Whenever I hear price gouging, it's sort of when the market demands it and they can make a little extra profit, they ought to be able to, because are you subsidizing them when they're not making money and not making any profits? We don't subsidize. So price gouging, I think, is something that should be touched by the government only in the rarest of cases, and it won't be in a case like this. But that might goose inflation a little bit, and it means maybe in 2025 we may get fewer with fewer rate cuts if this happens, if this extends for a long time. I mean, I think it'll be a few weeks or months.
Yeah, well, the countdown is definitely on, Tai, so thank you so much for joining me, and I look forward to sitting down with you tomorrow.
Great to be here.
Thank you.
Thank you.
And coming up, Dan Ives of Wedbush Securities will be joining us. Don't go away. We'll be right back after a quick commercial break.